Well, ahead of the big inflation data coming out on Wednesday and Thursday, one would think we'd have some quiet, consolidating markets. Not the case. China's Golden Week, a little bit tarnished. We'll cover all those stocks. Hurricane stocks. We got to talk about them. Insurers, man, finally succumbing to some of the pressure. We'll cover all of those. We'll talk to Christian Tharp at T3 Trading at 8:35. We'll cover Pepsi earnings if we have time, a few ratings changes. It's a busy day here on Tuesday. This is Pre-Market Prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay, folks, big old range overnight. We tested last week's low, but boom, right back up 25 handles right at the 57.70 area. The buck down a dime, cooling off after hitting 103. What was that on Friday? What else do we have? TLT sinking, man. No half rate, no quarter, maybe no cut at all. Gold down, or excuse me, crude down $1.63, 75.51. Red candle from yesterday. Gold in the green by 370. Silver going the opposite way, big time, down 42 cents, 31.59. Bitcoin down $565, it's 62,895. Let's bring in Triple D and AB, and boy, Triple D, bad for a Tuesday here. We got some price action.
We have big moves here, bringing AB here too. You'd think we'd start with the hurricane, but there was a hurricane overseas, and it was in the China markets on the reopening here, Joel. It was started out okay. Last night, actually, FXI was trading higher. At the 8 o'clock close, FXI was higher. And you're like, it's going to continue. You know, we're reopening over there. It's going to be good. And then the rug pull, and it was absolutely vicious. The FX I was watching, it was up at about 37.30, which was up 70 cents from the 4 o'clock close, and then down to 37, and then down to 36.5, and then 36, and then 35.5, and then 35, and 34, and 33, and went down to almost $32, down 13%. So just quietly, this move, epic last night, just in one overnight session, gave back almost half the move. I can't believe it. Half the move.
Shout out to our guest yesterday, Jeremy Schwartz. He was just like, he was the move. He said they're gonna need more stimulus, and that's it. That's what it was. Is that can China do this all by themselves? Like we could do it. We print. Other countries help us print, get a little support in the dollar. But boy, oh boy! But you got to see when you look at these kind of setups, if you could have chased for several days in a row, I think you got to look at some solid retracements here. Really, for the FXI, man, oh man. I'm not going to include that overnight action because, we'll just base it on the high of the moves. But you're even far from 50% retracements. I saw Gayfabe in here, and he was like getting ready to dip the toe. I think if anything, you've learned
You're
on
not far from a 50% retracement. Is that what you're saying? Not far.
Let's go with the FXI.
26 to 38. Your 50% retracement, you got close to it last night.
Okay, so you're including that print from last night. You're
even if you don't include that print from last night, Joe, look. Like what was the 50% retracement? I can't see the chart because it's too small, but blow it up and make it bigger.
It's in the lower 31 handle.
So we literally got within like a buck of the 50% retracement of the move in one night.
Yes.
Last night. Now we're up. We've bounced. So we got as low as, how low did we get last night? 32.5.
Oh boy, maybe we did get there. Let me go to my trusty.
We got damn close to the 50% retracement last night in one night. That's incredible, folks.
32.28.
32.28, and you're ballparking around 31.75. If you don't include the overnight session.
Oh,
'Cause
if you
do
include the
the
overnight,
overnight session, we 50% retraced this last night in one
yep,
night.
yeah,
We
that's
always
incredible.
talk about 4 things technically on this show, and I teach my technical analysis in 10 seconds. If I wrote a book on technical analysis, it would be technical analysis in 10 seconds, maybe 5. Support, I'll do it in 5 seconds. Support, resistance, trends, 50% retracement. That's all you need. Wow. Boom. 50% retracement. Obviously people use moving averages, VWAP and stuff. I just use boom. You can see it's pulling in, 50% retracement. We almost bounced exactly at that if you include the overnight session completely from last night when we got up to 37.5 last night on the FXI. That is incredible, folks.
Actual high of the move, right? You got it at 37.50. We can ballpark it. Let's just go from the yearly low of
You can't really go from the
21.
yearly low because we were 26 when we really started this. So I wouldn't take the yearly low. I think if you're on a 50%, you're taking it from when the move started. I'd ballpark that 26 because the yearly low is down at 24.59. I don't think that because it was up and it was down after that. Like it really never started climbing really until we got 26, and then we had blast off. So that's where I would grab it from. I mean, this is where technical analysis, obviously everybody's got their own levels. They've got their own way of doing it. I'd grab from the 26. So 26 to 37.5. Back down to 32 last night. Wow. In any regard here, that is a serious sell-off.
Yeah, an actual news headline behind this move is they're saying that China stopped short of unleashing more stimulus measures. But to me, I mean, so part of the reason all the Chinese stocks were hammered so hard, we know the geopolitical risk, we know, there's a lot of stuff going on there, but there is also all these concerns about the economy, right? So then China comes in, unleashes all the stimulus, the stocks start ripping higher. Now China says it is confident that it will hit its economic targets this year, which is the reason it stopped short of unleashing more stimulus measures. But if they're saying the economy is fine, then you would think like BABA is still, and some of these other stocks are still suppressed from where they would be if there weren't all these, fears about the Chinese economy and the, property, potential property collapse and stuff that's going on there. So if it's true that China's economy is in a better spot now than it was, then like, I don't know, this could, I'm not that scared of this dip on BABA as I've been holding because of that. Because I think like if they're saying no more stimulus because the economy is good, then I'm fine with that. But either way, that's what's driving this move is I guess the market was anticipating even more stimulus coming from China, which it did not get overnight.
And if you're waiting, for a sell-off to sell, I'm not selling when I give half the gains back in one day. Now, BABA did not do that, but the FXI did. BABA's actually held up pretty well. I mean, if you're looking at all of these stocks overseas here right now,
Oh yeah,
I'd argue BABA's holding up just about the best one of them all. Pinduoduo, like look at something like Futu. It's down 18%. I mean, had a bigger run as well. So, but from 129 closed down to 104. I mean, BABA's actually held up pretty well. I still have all my BABA 2AB. I have not sold one share of BABA. I had in the long-term account. I still think there's good value there. I'm hoping this is a turn that's for real. But obviously, last night's trading action really sucks if you're long. I did sell half of my Biden. So that's the only one that I did sell. I mean, these are big moves. If you're taking, Carter Worth said it well last night. I mean, when your stocks go up 30, 40, 50% in 2 weeks, if you're a trader, you take those gains. If you're a long-term investor, well, that's a different story. Maybe you're riding it out and you got to ride out the pain of last night as well. But I mean, we're going to wake up, you're going to open your account today and it'd be like, we had a lot of China stocks, be like, oh man, here we go again.
The only one that gave you a clean setup was the Pinduoduo. I mean, look at that. I mean, Dennis, you talked about your technical analysis and the simplification of that. Look at that, man. 4 tops in the same area. I mean, I know it's a higher price stock, but if you were ballparking that 155 area, Kaplui, you're back at 140.32. The other thing that I like to look at on these kind of things is the closing high for the move. And if that was something you're keeping an eye on, but with these stocks, I mean, you take them home overnight, baby, and boom, there you go. You got You got to take your medicine. Now we'll just see if it can find some support. Will they come out and do another stimulus like right away? I mean, the market's asking for a lot, and
well, that's what they're saying. Is they're saying they don't need to. They're saying the economy is looking better now, and that's what I'm saying. Is that I think
that's why we're selling off.
It's just
in 3 days. It's looking better. Okay.
Yeah, it's just an overreaction, I think, because of the China stocks. You know, we know they're going to be more volatile. If they came out in the U.S. and said we don't want. I wouldn't want, as a holder of BABA, for it to just be reliant on the government, doing stimulus because their economy is bad. I'd want eventually the economy to be doing well for those stocks. So I don't know exactly, I guess, the whole situation over there, but it sounds like, if everything was in the gutter, it sounds like they'd be doing even more stimulus. But either way, the Chinese stocks volatile today. We'll continue watching that. I'm holding on for now, though. That's my stance. I have a hold rating on my BABA.
I do as well, AB. I'm with you. I'm not selling any of my BABA today. And
I'm not buying.
It's not called sell the dip. It's called sell the rip. I mean, if you wanted to sell, you need to sell yesterday. I'm not selling when they fall 7-10% in a day. So maybe, that's it. Maybe we're going to regret not selling. But at this point, I didn't buy BABA for a trade, and I didn't buy Baidu for a trade. I bought them because they were ridiculously undervalued. The market started seeing that, but last night, obviously, China once again harpoons their own stock by saying, who needs stimulus? Well, we know a market's like stimulus.
Well, Dennis, I actually had that conversation with my buddy yesterday, as I was talking about, because we had put a trade on BABA like a year and a half ago, saying this is so undervalued. We kind of bought some like leaps, and just it was a donation to the market makers because BABA did not go anywhere. My calls did not go anywhere. But we were talking about it. We were like, maybe if the valuation is our thesis for getting into a stock, that a trade isn't the best way to do that, to just buy and hold if valuation. Then if you have a catalyst idea, then maybe that's when you trade and you buy, the calls or the leaps or something. Because if something's just undervalued, it might stay undervalued for a year, for 18 months, for 2 years before the stock finally starts picking up. Or a decade.
In the case of some China stocks.
In the case of China stocks. All right. Well,
I think that's a good way to put it. I think, and if you want a teaching moment here, I think AB is giving you a good one here. You've got to identify, one, are you in it for a trade or investment before you make the trade? Because so many people will adjust depending on, the movement of the stock. And usually it's this. Stock goes down. It's like, well, I can't sell at a loss, so I'll just hold it. It'll eventually come back. So never let a trade become an investment. So if you were in BABA for a trade, and obviously, it's not working out now because of the overnight action there, you've got to get it out. I did not buy for a trade either. I put it in the long-term retirement account. It's called RRSP in Canada for a reason, because I thought it was undervalued. Obviously, market thinks it is now too, because it's up significantly from where I bought it. But, can you ring the register on the way up? You can. I mean, when things go up 40, 50% in 2 weeks, you can. You don't have to. But I feel like we're still, like, it's not like it all of a sudden became overvalued too, AB. Like, I mean, if we went to a point where BABA is now trading at a market multiple US like 21 times, but, it's expanded up to 13 times, 14 times. So it's still fairly cheap. So I think, use that valuation metric and say, hey, I bought this at 10 times. I think eventually, if it could get up to 17 or 18 times earnings, maybe that's where you ring the register.
All right, I got a learning lesson for both of you guys, and I'll ask the question to both of you simultaneously. What would be the best thing for BABA right now? I mean, I know you wanted to catch a bid today, go back 117, blah blah blah. We don't know if it's going to do a 50% retracement. What would be the best thing for BABA? And I'll give you 5 seconds. And I'll say it's not immediate. It's not a specific price. I'm not saying, because the gaps are so hard. Is there a gap if you're trading the Chinese markets? What would be the best thing for BABA shareholders right now?
Are you talking about fundamentally or technically?
No, technically.
Just some consolidation, some sideways action where we build a base here around 105 to 110. Do some sideways action and then start hooking up. That's what I always like, is I like the base. I like the little hook, and just starting to hook up. That's when you strike, the little hook up. So I guess on my fifth thing of technical analysis is wait for that little hook off the 50%. And there you go. So,
yeah. And also what that does is, if you do, let's say, you come down 106, 107 area, and then you sit there for a while and you get a little bump. let's say you missed the trade and you want to, okay, I'm going to give it a shot. I missed the big move, but I still think it's going back to 300. At least you have an identifiable point where to stop yourself out or to reevaluate the trade. Right now, you're kind of boom. But you're right. I mean, it's hard to say if you're, if the stock's in your portfolio, but I think this chart looks great. I mean, having this kind of move, 110, you got your way off the pre-market low. I mean, look at holy mackerel. I mean,
and it's expected you're going to get pullbacks, Joel. Nothing goes straight up. I mean, I wish stocks just went straight up, and it feels like in the last 2 weeks, China's just been going straight up. This happens. When stocks move up 50%, they move down quickly, 10, 12, 15% in a day. This just happens. So, I mean, this is what you're not investing in some, staple or some, Coca-Cola that moves 50 cents a day. I mean, you got to kind of know what you're in as well. And it's going to be wild. And China stocks were very stable for a long time, but they're entering a wild period right now. And obviously some uncertainty, with whether the QE from China is going to continue. We'll call it QE. Sounds like they're going to put it on pause. And that's why the stocks are getting a little bit of a breather. But if they're really, think about this, if the stocks really started to sustainably tank, well, it looks like they were defending their stocks before. They probably will do it again. So, I mean, as much as the Fed is data dependent, China all of a sudden became market dependent with their commentary. They wanted to stimulate the stock market. It's been in the gutter for a decade. So, I mean, if you've got the government still thinking like that, so the stimulus apparently working, they're just letting it go. If it stops working and the stocks start leaping, I think that they would probably come out and start to do some stimulus once again. So I think as much as the government's been working against China stocks for the better part of the last decade, it feels like the sentiment has turned there, and maybe they're going to start to working with them. So I kind of like, maybe you're even thinking about buying the dip on China. Maybe it's not a bad call.
Let's stay kind of on a offshoot of this, and let's just go before we go to the hurricane trade. Let's talk about the semis and let's talk about the tech stocks, because we identified early on when money was coming out of tech pouring into China, right? What happened yesterday in the semis? What happened in the tech stocks yesterday? They exploded. Nvidia here getting over 130 in the pre-market. Over 130 yesterday in the pre-market trading. SMs. Why don't you hit us with that SMCI news? I mean, that was and
it continues.
It continues.
The party continues. AB.
So SMCI, a lot of the other chip stocks trading higher this morning. But I mean, yesterday during the session, FXI closed higher, and so did the chip stocks. Correct. So like yesterday, you didn't have this inverse trade, but this morning you do.
Maybe they were front running it, moving it over here. But it's an argument. There was an argument given, which Joel's trying to argue, which might be the case. Is China's loss overnight going to be the U.S. market's gains? I think it is to a certain extent, because you're seeing the chips and the tech stocks really flying here this morning. So almost like a safety trade going on. The news yesterday, what Joel was talking about, was SMCI. They gave some numbers, some numbers about how much. And if you scroll to yesterday,
super microcomputer details 100,000 GPUs deployed. So we know
per quarter.
We know that SMCI's had some issues with the reporting their numbers, but these numbers that came out yesterday, shares are trading high after the company said it recently deployed 100,000 plus GPUs, so 100,000 plus, not just 100,000, with liquid cooling systems for AI factories. That's again per quarter, like Joel mentioned. So SMCI ended up closing up 16 or 15.8% yesterday, $6.50, up another $2.50, 5% this morning. So if you were one of the brave that went out and bought SMCI after that big dip, you're so far getting rewarded.
You are. It depends when you bought it after.
True.
Obviously, we went from 100 to 90 to 80 to 70 to 60 to 50. All those people are still losers. I was one of them because I bought it around 60 on my rebuy. And then now obviously down to 40. So eventually, if you keep trying to buy the bottom, eventually you do catch it. But we're up at 50. You know what? You're kind of in the middle of nowhere here. Gapping up into a little gap there, Joel. There's obvious resistance up at 60. I mean, that's 10 points higher. We're not even thinking about that level yet. But if you're in it, maybe that's a target. I'm in it. That would probably be a target for me. If it went back to 60, I'd probably lighten up or potentially even sell. I did lighten up already and took part of this loss on SMCI. But I mean, We still don't know if the books are absolutely correct, but it sounds like regardless of the books, this company's selling a lot of product.
Yeah, let's hope it's not 10,000 instead of 100,000.
Oops, wrong, zero. We put an extra zero on that.
Yeah,
that would be stupid.
the old Lyft. Remember when Lyft did that on one of their
they
earnings?
did. I forgot
Yeah.
about that.
It was,
Yeah.
That's so funny. What did they do again?
They reported like growth of, it was supposed to be like 50 basis points on one of its revenue numbers, and it got misprinted as 500 basis point growth, and the stock went up. But what was crazy about that was the stock went up, and then when they came out that it said it was wrong, the stock came back down, and then it went right back up almost to where it was on the misreported numbers. So that was interesting price action for sure. That's what I thought about as well.
A quick technical setup here. Dennis said 60. That's a psychological number. I mean, all the wall there is at the 63. I mean, you got 3, 4, 5, 6, 9, 10 highs there. I know that's $13 away. That's your super extra major resistance. A few gaps to fill, but until today, 48.5 was the high on the monthlies 2 months in a row. So if you're looking to buy this thing in a pullback here, boy, oh boy, old resistance until, well, it's taking it out today. I'd like to see it get a sustained bid at this 48.5, buy it on a little bit of a pullback, and then continue its move higher. But 2 monthly highs, working on a green month here for the first time in 3 months. So SMCI, just real quick, technically, NVIDIA, keep your head on a swivel here at 130. Stalled here, major league in August. We're back here again, multiple highs, ballpark that area for NVIDIA. So there's a look at couple of your semis here, moving nicely, leading the market higher.
What should we talk about now?
Well, we talked about one. We talked about one storm. Why
don't we ask the chat, because they if we talk about China too long, it's not good. But you all know what we're going to talk about.
Yeah, let's do it. Milton. It's all about Milton.
So Hurricane Milton, we mentioned it yesterday, is now expected to touch down in Florida tomorrow or early Thursday. Some people are saying this could be the worst hurricane we've seen since Katrina. Some people are saying it could be worse than Katrina. It seems, I don't want to say that there's like positive news, but it seems like maybe, I saw something that it got downgraded to a category 4 as it went across parts of Mexico. So that is good. If it touches down in Florida as a category 4, as opposed to a 5, that would be good, just considering what, some people were anticipating yesterday, the day before. But either way, this looks like it has the potential to be one of the worst hurricanes Florida has seen. There are some usual suspects moving and some maybe not so usual hurricane stocks. Of course, we have Generac pulled up, which is always brought up as a hurricane trade, as if tens of thousands or 100,000 people lose power, then obviously Generac could be set to benefit from that. But there are some insurance stocks that have been getting hammered. There are some other stocks with more exposure just to Florida as a whole that are getting hammered here. So where do you guys want to start? Should we start with Generac?
Well, let's start with the hurricane talk overall. So right now it's projected to hit, and I've done a lot of research here, it's projected to hit as a 3. A 3 would be really bad, and as I believe, with Tampa, and it's projected to go, like there's 70% chance going to hit Tampa directly, which is, obviously the biggest city on that side. I mean, it's going to be just devastating, even if it hits as a 3. If it hits as a 4, it'll be one of the worst storms in U.S. history, like one of the worst disasters in U.S. history. So you absolutely don't want to see it as a 4. As a 5, you could forget about it. It cannot hit as a 5. And you hope it, there's an outside chance it could, but if it hit as a 5, everything's flattened. So that can't happen. We can't see it as a 5. So, what you're hoping for, best case scenario, is it doesn't hit Tampa directly and maybe it gets down to like a 2. And then you're looking at maybe another Helene in that area. So, there's a lot of scenarios out there right now. The insurance stocks are not painting a rosy picture, though. So let's stay away from GNRC for a second, which was an obvious trade. Full disclosure, if you just want to talk GNRC just quickly, is I did own it. I bought it overnight on the Sunday night session, and I did sell all of it now this morning. I am out of GNRC. I've never seen a 14-point move on a hurricane. I remember I said on the show, if it went 7 or 8 points, I'd likely sell it. I sold some of it, because it did in 20 minutes yesterday, and then I kept some of it till today, and I sold the rest of it today. So unbelievable move in GNRC. I'm not saying the party's over here. I may go back into this yet, but it's a big move really fast, and they did downgrade the stock last night. So I'm locking in some profits here. Wait and see what this action looks like today. I may go back in it yet. Going to the insurance stocks, though, they did not get hit on Hurricane Helene. The insurance stocks really didn't get hit hard at all. The anticipation here of obviously this being a lot worse than Helene is being priced into, especially the reinsurers. So people are going to talk the obvious: CNBC, Allstate, Progressive. What really gets hit on hurricanes are the reinsurance companies, because they're the insurers of the insurers.
To the insurers, yep.
Yes. So they're like the last man standing. So when you get the natural disasters, it's the reinsurance stocks that really get hit. 2 big ones you're showing right now, R&R. Had its worst day of the year yesterday. Nothing has happened yet. That's just an anticipation that this is going to be real bad. So if you look, Helene happened 2 weeks ago. You don't even see any movement on the chart in there.
New all-time highs. New all-time highs in these stocks.
It didn't care about Helene. It cares about this one, and that is not good news, because this market often is correct. So this market is very, very scared that this is going to do some significant damage. So R&R obviously got crushed yesterday. Other insurer, Everest Re, which is Everest Group now, they renamed themselves, is symbol EG. It had its worst day of the year yesterday as well, just in anticipation. Again, nothing has happened yet. So it's just market anticipating that this could be really bad. Now, again, if it hits as a 2, these stocks are going to be buys. If it's as a 3, it depends. If it's as a 4 or 5, if it hits as a 5, these stocks get cut in half. I'm not even joking. It can't hit as a 5. We don't want to see it hit as a 5. It's probably going to hit as a 3. And that's what, is not going to be pretty, but they're going to be able to survive that, rebuild it. So that's your scenarios. Really, three, probably a 3. It's a very high likelihood it hits.
I hope 3. So.
And that's what we're going to hope for, 3 or less. 3 or less. My father-in-law has a place in Gulfport. It's condo, 10th floor, looks over the ocean. He's got hurricane windows in there. I think they're strong enough to take a 3. Nothing takes a 5. When you're 180 mile an hour winds, windows are blown out and buildings collapse. Maybe not all buildings, but framed buildings with, 2x4s collapse in a 5. So you cannot get hit with a 5. So it's a 4 right now. Hopefully continues to weaken as it moves further north. Maybe hits as a 3, and they're going to be okay.
I'm just going to throw some other insurance names out there that were moving yesterday. I don't think these were moving as much because they're reinsurance plays, but just because they have more exposure to Florida than some other stocks. HRTG. This is Heritage Insurance Holdings, was down 24% yesterday. This is this is a regional property and casualty insurance company that has a lot of exposure in Florida. And then, similarly, you have ACIC, American Coastal Insurance Corp, which just the name of that, American Coastal Insurance Corp. I mean, putting yourself at risk there. HCI Group, which is another insurance company.
HCI is the symbol. Crushed it too.
Oh,
wow.
Man.
HCI.
Wow. It's scary. AB, this scares the hell out of me when I see these insurance stocks getting hit this hard ahead of it. They are anticipating a very big disaster here. This is really scary.
Yeah, and then a couple other hurricane stocks to mention here that I was just looking through yesterday, because I always try to find, you have the obvious ones that people are talking about, Generac, et cetera, but some a little bit maybe less obvious ones here. There's one, here, let me find the ticker real quick. HZO. This is a boat dealer, Marine Max. Wait, did I put that right? No, it's HZO. There we go.
Yeah,
HZO, Marine Max. This is a boat dealer down in Florida. That got hammered yesterday. And then another one that I've seen people talking about on Twitter and whatnot is Mosaic, ticker MOS. And this is one that, so we talked about in the Hurricane Helene. Spruce Pine, a little town in North Carolina, got hit, and it's this mining town for quartz for the semiconductors. Mosaic is similarly a mining company down in Florida that has phosphate mines that are supposedly right in the path of destruction. So if those mines get hit, people are saying that Mosaic stock could, get hit 50% or something. I saw a thread on Twitter. I'll pull it up here. And so again, I'm not an expert on the phosphate stocks or the phosphate mines, but this is coming from Josh Linvell on Twitter. Phosphate market, this could hurt. Florida is built to withstand hurricanes to an extent. This looks bad. This looks really bad. Even if production facilities do not withstand major damage, they need workers to run the plants, and homesteads may not fare as well. So you can see here in this picture, has where the phosphate mines are located that Mosaic owns and operates in Florida. And those are all basically right in the path of destruction there for Milton. So those were just
that's more in the middle. It's amazing. Usually it's just the coastal businesses and coastal cities that get hurt. But because this storm is so big and so powerful, it's actually at a point where Disney is taking precautions here. They're right dead center. Usually Disney doesn't get affected by this at all. But if you look at the Disney stock, it even got hit yesterday. And they're talking about potential park closures because of this storm here. So, which is scary when you're taking precautions 80 miles inland. So this is serious, folks. If you are down there, take all precautions, do whatever you can to keep safe. Buildings can be built, but lives cannot come back. So get to safety. Safety first here. The bullish trade, so we gave all the bearish ones there. Obviously, the stocks that are benefiting from this. We talked GNRC already. I'm going to have Joel do a technical because it is the hurricane trade. We'll do that just in 1 second, but I'll give you the list of them. Beacon Roofing. A lot of roofs are getting blown off, folks. So BECN is running ahead of this. It had a big day yesterday. Lowe's and Home Depot are obvious plays. They didn't move up too much yesterday there. And then the other one, URI, United Rentals. Full disclosure, I do have position still in URI.
What about Uber or Lyft?
Saying ride sharing, like to get rides down there?
To get hit,
I don't even think they're going to be operational.
Well, I don't know. I know. I saw that. I saw that. I think
that's push. That's what's the percentage of their business down there?
I don't know what percentage of their
0.
business is
1,
down there.
0.
Yeah,
no.
I think we're reaching with that one.
The reason I say that is because I think DeSantis or someone said that there's free Lyfts or Uber rides for anyone trying to leave the area, and I was like, what about the drivers? Do you think their drivers are just going to want to go all the way back right into the storm and grab more people
and sit in the traffic? Yeah,
this is where you need the full self drive. Send those Tesla.
Those Teslas. They will just maneuver right through the
flying cars.
They're
going to create the flying car right now.
Oh yeah,
in the hurricane. Look, it's
great.
flying.
Yeah,
that car is flying.
I guarantee you, an FSD would not work in this kind of environment with trees down and everything. I don't know. Whatever.
These are all jokes, folks. But this hurricane is no joke. No
exactly.
Joke. So again, take cover, take precautions. These things you can trade. The insurance stocks are getting hit again. Remember, if it hits as a 2 or a 3, you see these trades probably all reverse quickly. It hits as a 4 or a 5, and I don't know if any of us know what's going to happen.
What is the? Go ahead.
Go ahead, AB.
I was going to say, what is the move or the investment if like you think this is going to become a more frequent occurrence? Like this year we've
short
seen
everything.
Okay. Buy Generac.
Buy Generac. Yeah.
Well, I'm going to tell you, AB, and I was thinking this when you were giving out some of those, regional plays. I don't think there's any reason to think that this is just a one-off and this isn't going to be a more frequent thing. I mean, if you do believe in global warming, you do believe that. Can you hear me still?
Yeah.
I don't. My one computer froze up, so I didn't know if I lost internet. I think looking at those stocks that you were just talking about, AB, like the ACIC and the HRTG, you got no business owning those things ever. Like American Coastal Insurance, if you think this is a thing that's going to continue to happen, I don't think I'd want to own ACIC ever.
I want American
never
Midwest.
Again. Like not buying the dip and never owning that stock ever again. Because that sounds, if you think hurricanes are going to continue to devastate them, because this may not just be a one and done. This could be something that we have a big one every year, 2 every year. You never know. So this is, scary, and I wouldn't want to own those stocks.
We were talking about the GNRC yesterday when we were meeting, and you're like, "Wow, I thought it would go up 5 or 6, and it's up." I think it was
14.
traded, yeah, and it was trading like 171, 172, and I'm just like, "Well, just maybe try and sell it on some weakness, if it pulls back." And I know, it far exceeded your target. You took your target. I think, if you're a short-term trader in these things, you just got to have your eyes peeled, because if the algos get news that this thing is downgraded 4 than a 3, then the algos are just going to be all over this, and
Yeah,
you're
hit
going to
it.
be they're going to hit it. They're going to be selling into weakness here. Two other things. Number one, Dennis, you reminded me, and this is for like our old Detroit people in here. You are better than Sonny Elliott. Remember Sonny Elliott?
No.
You
So I
don't?
think it's before my time.
Oh, really? He was a weatherman in Detroit for several years that made all
Oh.
these great. Yeah, Sonny Elliott. Someone in the chat help me. There has to be an old person in the chat from
So
Michigan.
why am I better than Sonny Elliott with my weather
Your
synopsis with the
analysis,
3,
man.
4,
You
and
were like
5?
5, 4, 3, and if it's a 3, the stock's gonna. I mean, he never included the stock price action in this. So, I mean, come on, what more could you ask for? I mean, we didn't have the modes of communication back then either. The other thing too, and you can tell me if I'm really stretching it here, but what about banks? That have exposure to companies in this area. I mean, the banks have been moving up, but I mean, if you're talking about the kind of distress, what about the companies that have loans with banks and everything? So I think that's something farther on down the line. But let's
Well,
just
not a
keep
bank, but on this same trade, Berkshire Hathaway got hit yesterday, and that's because of Geico.
Oh,
So Burke had a bad day yesterday. If you're wondering why did Burke down $7 yesterday, that's Geico. That's Geico. So remember, Berkshire Hathaway has exposure here, folks. So huge part of their business is Geico. That's something to think about there too. So Burke.B is a little scary to own
I think Burke's pretty diversified.
But either way,
let's go ahead.
That 8-point move yesterday on Burke.
Oh, we got our
Let's
guest.
go.
We're letting our
Let's
guest
bring-
hang here.
Yep.
Dennis, one more thing. Do you see that Berkshire is not insuring the Robo truck anymore?
The Geico, yeah, I did see that, and they denied that. So it was one person. This is again, guests
All right, let's
coming
get
up.
Christian
We're
in.
keeping the guests longer, but this is the way the media is. Some person reaches out and says, "Oh, they canceled my truck insurance," and they post the ladder and everything. Geico's denying all of that, but the media runs with it, and the media runs with it because they hate Elon, and they hate the fact that anything he can do can be successful, and they have to run with this. I think I'm calling all BS on all of this. Somebody came in and the media just ran with that. Fake news.
All right, let's bring our guest on. We've got Christian Tharp. It is a T3 Tuesday. You guys know we love our T3 Tuesdays here. They always bring us some great guests, and that's definitely what Christian is. So he's hanging out backstage. Let's give Christian our special intro and see what he's been watching when we come back. All right, Mr. Christian Tharp, welcome back to Benzinga's Pre-Market Prep. How are you doing this morning?
Well, funny you should ask, guys. First off, thanks for having me on, but having a slow start to my morning. Apologize to any of your viewers if you see right here in my face, my daughter planted a softball in my face yesterday.
Oh my gosh!
Wow. So she's a good hitter then.
Yeah.
No, she was taking lessons to be a pitcher, fastball pitcher.
So she's a good pitcher, or you're just a bad catcher.
Well, yeah, that's what my wife says. Like, wait, can't you catch? Hit the wrong thing on the ground when I went to get it, popped up, knocked me right back. So I'm a little swollen in the face and
stitches. Any stitches?
Well, I'm gonna go in today because it's definitely swollen and there's a weird cracking, clicking noise when I play with my nose. So, but yes, doing great.
Are there any stocks we can buy or sell off this?
Based on Christian's nose?
Yeah.
Mass.
Yeah, we got that. Well, we have United Health, so you can check on that. See how that goes.
Okay. Yeah. Let me know how that goes. I think we actually, I just switched over to United Health from Blue Cross Blue Shields. All right. Well, Christian, let's, since last time you've talked, we've had some, some big market moves. We've had China breaking out. What has been top of mind for you? What have you been watching?
You betcha. You betcha. I would, if I had to narrow it down to the two main things, probably the overall market as usual, being a technical analyst, right? Rising and falling with the market. And then China stocks. You mentioned it. We're big fans of those. We do a lot of trading just based on volatility. I love things that fly around, move around. We like a nice, good strangle strategy from here and there. So things like Futu being down $24 today in the pre-market's kind of fun for us. PDD, I think, was down 13, 15. So these China names, we've been keeping an eye on them really for the last 2 or 3 weeks as their volatility has picked up. And
could you explain that strangle for us and the strategy? We don't talk a lot about those on the show.
You betcha. You betcha. Yeah. At its most basic, for those of you that trade options, we're just buying a call, buying a put. Now I guess you could say, have different variations of that when I'm speaking of it on our calls and our webinars and such, which is sometimes, we're just indecisive. I'm just playing the volatility. So something like Futu is we really latch on to before SMCI split, we latched onto that. These things that can really fly around and you can afford to own both sides and you're not really being directional. You're just saying to yourself, hey, I just think this is going to move big one direction or the other. Now, there are other times we employ a strategy like that where, well, I'm buying calls because I think security A is going to go higher, but I want to hedge myself with some puts on that same security. Goes in the books as a strangle, but it's a little different than say, hey, if I saw Futu come in at 100 today and I wanted to buy the 90 puts and the 110 calls, saying to myself, I think by week's end, this thing's moving $20 or $30, right? So it's a great little strategy for us, works pretty well. Smooths out our equity curve a lot because it's difficult for us to really take some major hits when we're on both sides. So Futu's been fun for us here lately.
Yeah, timing of those things is very important because you're buying premium on both sides, right? So you need the timing on those things is impeccable. Yes, you're market neutral, but the timing of these things is very, very important. So what's on your charts? What's hot? What's not?
You bet. Well, you take out those China names, and we do like a VST. That one has been in the news the past couple of weeks. So those for us are volatility type plays. But when we look at and by the way, Joel, you're absolutely right. I can't count the number of times I'm on a call and just try to make sure I remind members and students, look, strangles aren't the end and be all. You don't want to employ them every time, all the time, so forth and so on. There's a timing involved. And certainly you got to think about realistically where a security can go and how much you're going to pay, because you got to pay for both sides. So definitely love that you made that point. NVIDIA is something we're watching and we're paying attention to the 130 level. So if we get out of that and we're just looking for something that, hey, we're looking for a breakout, a breakdown. If you go back into the August month, you'll see NVIDIA struggling to get above 130 for like 4 or 5, 6 days in a row. It just couldn't get above it. Yesterday, even in the face of a market drop, NVIDIA went up and challenged that 130 again. When I just looked before I came on the call, it's up there challenging that 130 again. So we're watching NVIDIA for that move above 130, a hold above. We believe that'll be kind of like the release, the release valve that should allow that thing to get moving and run into new highs again.
One more thing on the strangle trade. How much time do you give yourself? Because we're talking about the premium and everything. A week, a 2 week, a month. What's your time frame on those?
You bet. Again, another great question. And for those that have never traded strangles, these are very, very important things to consider. So, pound for pound as a technical analyst, I really like the shorter term trade. So I like current week, sometimes going into the following week. But even if I do that, I'm putting that trade on later in the week. So I'm really staying really close with this. It's important because if all I'm trying to do is capture a move on NVIDIA here from 130 to that high of 140, if that's all I'm trying to capture, then obviously, and I do want to hedge myself as well in case it comes back down again. Well, the further I go out, sure, higher probability I reach one of these points. However, it's going to cost me a lot more. And I run the risk, as we call it, getting middled, right? What if we just get stuck? So I typically won't put these going out too far because I want those premiums to be lower in relative to the move I'm looking for. So I don't want to spend $20 on a trade. If all I'm trying to do is get to 140 or protect myself in case we fall back to, the 120 area or something like that, I don't want to spend 10, 15, $20 on that trade if that's all I'm trying. Because the logical response would be, yeah, but if I go out multiple months, right. But for me, I think it's much easier for us to look at this chart here of NVIDIA and say to ourselves, if we break through 130, it's easier to answer this question. Where do I think it'll go?
Mm-hmm.
We'd probably say 135 or 140. I'd be probably saying 140. We can also look at this and get the timing right. Well, how long does it normally take in NVIDIA to make this move? You start going out 2, 3, and 4 months. What you cannot tell me is where that thing should go. And you certainly can't tell me how long it'll take. You're basically guessing, right? Using the information you have to do so. But as a non-investor and as a trader, it's very difficult to answer, if not impossible to answer those questions, which is why I don't want to spend, again, $15, $20 on something I can't answer those two important questions. So I keep it pretty close.
Do you puke out the wrong end, or do you just kind of like hold on for, a reversal?
Yeah. So what we'll typically do when we get these right, we win on one side, we keep the other side as a lotto. Every once in a while, one of them hits, but usually by the time, let's say we bought this strangle for $250, and let's say we're just targeting selling this thing for $5. When you look at a current week, by the time the overall strangle gets to a value of $5, odds are one side is accounting for $4.90 of it. So it's not even really worth closing out. You might as well just keep it, and hey, you never know, right? Any number of things can happen. Why close it for a nickel? So that's generally how we will play. Now, if we hit our targets early, like it won't be a surprise if today, for example, I'm keeping a close eye on Futu and PDD. These movers, VST moved, I think, $15 from top to bottom yesterday. These are the ones that volatility really helps. If we can hit our target very quickly and that other leg still has value, then yeah, we'll close it out.
And then Christian, outside of, we talked the overall market, some China stocks, some tech stocks. Are there any other sectors that you're, specifically looking at right now? We've had a lot of volatility in like energy. Do you ever dip into those markets? Or are you sticking more toward the just overall markets here?
I would say that when I know a sector and or sectors are in play, then we will kind of go there. I don't know that I go searching for it. I'm a huge fan of overall market, rising and falling with market, but obviously being aware that, say, for example, tech stocks aren't necessarily the ones in favor right now. You mentioned Home Depot. We had targeted that last week, breaking to new highs and such. So we want to be aware of who's moving. I look at it very somewhat almost agnostic. I don't care what sector you come from, right? I just want either a stock that's nice and volatile or a stock with a great level, a breakout point. Like that NVIDIA we just mentioned. I do think the market overall right now kind of has me a little bit, on one hand, we are where we are, right? Dangerously close to hitting more new highs, or we just recently have. On the flip side, most know that seasonally in an election year, October isn't a thrilling month. S&P putting in a nice rising wedge since the beginning of August, right? If you go back the last 3 years, S&P has been very good about confirming these rising wedges and taking a little bit of a dip. Peculiar to look at the VIX. I think if you go back historically, notice how we just recently hit new highs in the market, but the VIX kept a higher low. Now, that is not an uncommon occurrence when markets are thinking about taking a little bit of a dive, right? So VIX has been climbing and climbing and climbing, even though the market's not. So if you go back to the precursor to, say, 2007, 2008, and by the way, I'm not in any way, shape, or form saying we're getting ready to drop 50%. I'm saying when you look at these times where markets have taken some dives, it's not uncommon for the VIX to start kind of showing an elevated fear, so to speak, as markets hit highs. We're seeing momentum weaken as we went up to these last highs. So putting all these together, the market makes us a little bit edgy, a little cautious on that bullish side. But we do think on the other end of it, we should resume a bull market, even if we do take a dip here in October. So rather than sector, to answer your question, I do, yes, focus very heavily on just trying to be on that right side of the market.
Christian, general question. Do you switch up your strategies depending on the type of market we're in here as well? Because sometimes momentum strategies are working. Sometimes contrarian strategies are working. Do you like take a look at, what's working overall. Like if we're just chopping around, are you maybe not taking as many breakout trades? Or, do you just like stick with your strategy and, you're just still finding breakouts even in contrarian markets?
Absolutely. So yes, switching it up. So circling back to the idea of the strangle, like typically that is something we want to employ, as Joel mentioned, right? You need to be a little bit picky and choosy when you put this on. If we're in a market where we feel like it's an all aboard market, up or down, then we are just going to simply try to be directional. Hey, let's buy some calls. Let's buy some puts. When we get into these markets that are low volatility, we will tend to take the foot off the gas of the trading, because that tends to create a little bit more problems, at least for our trading strategy. I liken it to when there's no volatility or no movement. Think of the flip side. When there's a lot of volatility, you tend to be moving in a certain direction. So think of that as that raging river, and that if you're just in the right, if you're just in the boat, you're probably going the right direction. But when you have no volatility, it's almost like being in this pond, where sometimes if you're ever watching a pond, this boat's floating to the left, this leaf is floating to the right, these are sitting over here on the shore going nowhere. One little rock or acorn falling out of the sky, right, sends these boats rippling a little bit, but these don't move at all. So in a non-volatile market where there's just no stronger current moving us, that tends to be problematic for a trader doing what we do, which is we do depend on movement and volatility quite often, even if it is directional. So yes, definitely switching up a little bit pending, the environment, the overall market environment that we have.
And then Christian, real quick, we're running up on time here, but we do have this QR code on the screen and a link in the description for people to sign up to trade alongside you. What does that entail?
Absolutely. Well, it is we call it an open house. It's all week long. The flagship trade signal service that I operate, which also includes coaching along the way in every call. We trade during the prime time, so we call it prime time trading. That is Tuesday through Friday at 3:30, and that is Wednesday through Friday mornings from 9 to 10 usually. So we try to trade around these prime times, which, yes, we can get some volatility around those mornings. We can get some insight into what the market's thinking at the end of the day. So this is an open house. You come on in, check it out, trade along with me, ask questions, learn a little bit. Speaking of these strangles and how we employ them, sounds simple on the surface. And that's why I really love Joel's questions. A lot of things underneath the hood of the car. So if nothing else, you'll learn a lot, but we'll make some trades. We'll make some money along the way.
There you go. Well, Christian Tharp from T3, always good to have you on the show. Thanks for joining us on Pre-Market Prep this morning. Hope your doctor's visit goes well. There's no structural damage to the nose there. And yeah, have a great day.
Catch, don't coach. Don't coach your girl. I hope you're not coaching your daughter, because there's nothing worse than coaching your daughter in softball and she's getting shelled and you got to walk out there and they're like, Dad, don't take me out. Like, no, give the hook to your daughter. But hope everything turns out well for you, Christian. We'll get you on again real soon.
Awesome. Thanks, guys. Have a great day.
All righty, y'all. That was Christian Tharp from T3. Again, hit that link in the description or the QR code up on the screen if you want to go trade with him for a few days. Joel, popping your charts back up here. Where do we want to go from here?
Bring up Roblox.
Yeah, Roblox.
Hindenburg report, I saw.
Yeah.
Right.
Hindenburg is, so Roblox getting Hindenburged. Yes, we're using it as a verb here. Yeah, getting Hindenburged here this morning. It's interesting. I'm just trying to leaf through the report here right now. It's down 10% here right now. They're talking about, it's interesting that the thing has been down like 10 straight days in a row. That's what's interesting. There's 18 tweets here in a row on it.
From what I can see on the
here on it, there's a lot of information here.
Yeah, inflated. They're saying Roblox has inflated key metrics and that there's also some child safety issues. From what I can see from this short report, sounds very similar to a short report that was put out a couple years ago by Edwin Dorsey, who I've gotten to know over at the Bear Cave. Maybe we'll have to bring Edwin on and talk about it, because again, he put a short report out on Roblox outlining these same exact issues that it looks like Hindenburg is now outlining now. So, it's always hard to tell in the immediate aftermath of when a short report comes out, how much weight does it hold? How much does the market, it usually comes down to like, the reputation of the person putting the short report out. But then you got to go through and see, okay, how much of this is like usually there's truth in it, but how much of it is like fully true versus maybe the short, report kind of exaggerating some of it. But it sounds like if both of these short reports are saying the same exact thing, that there might be some weight there for what they're saying here about Roblox.
Data suggests that Roblox could be massively overstating the true level of user engagement across its platform. There's some pretty serious allegations here too, saying that they're exaggerating numbers. Second quarter 2024. Yeah, I'm just reading through it all. There's so much information here. It's going to take us an hour to lead through all this. But bottom line here is they're talking about inflating and numbers, obviously, and user engagement numbers. So that's getting hit here. It's always interesting, Joel's point, that the stock is very weak going into this. We've often talked about, do these, short sellers front load it and then come in. I mean, I think there's
Does
a case
Hindenburg
that they
trade?
do that.
I know Jay mentioned that there is some of them that don't trade, but that doesn't mean you can't
That
tell.
some of them don't actually put on trades. I don't know.
Yeah, I don't know
We
about
know some
that.
of them do. Obviously, there's a lawsuit against Citron right now. Andrew Left is, got a lawsuit going against them for, and I'm not saying, everybody's entitled to their opinion. Everybody's entitled to, say what they want to say. So, freedom of speech is very, you want to write a report and you're doing some great research. We appreciate that. As long as they're not just, reporting and then covering into it, I wouldn't have a problem with it. So it depends on, like, if they're shorting it and they're issuing a report, I don't think it's an issue. I think the issue would be, like, the timing of, like, when you're covering it. So that's, I think, with Citron, I think the DOJ didn't like the timing of the covers.
Yeah. So again, Bear Cave. I just pulled it up.
Spinner saying it might just be paid research only, so we don't know this.
Well, someone got the research.
Hindenburg, I tell you, out of all of them, there's a lot of respect for Hindenburg. So there's definitely a hierarchy here of, like, how influential some of these reports are. I mean, you got Anonymous shooting Panda over there, shooting down stocks that we don't even know who they are. Hindenburg has a lot of respect on the street. So when they issue something like this, it's going to move the stock and Wall Street's going to take note. So I'll just say they're very well respected on the street at this time.
All right, well, that's the news there on Roblox. We'll see how the market reacts today from that report from Hindenburg. Again, shout out Edwin Dorsey at the Bear Cave, put that short report out. I'm looking now in February of 2022. So beat Hindenburg there by 2.5 years, outlining some of the similar problems there at Roblox. They're teaming up now, though.
They do say we are short shares of Roblox. They do disclose that 2 minutes ago. We are short shares of Roblox. So just to let you know, they are short the stock. So this, in this case, it's not just research. They are indeed short the stock.
Hindenburg, keep an eye on 3530. That is, I don't know if you're going to get there today, and I know they can't cover today, but you got, two matching lows in that area. Buffeted by another low at 34.72. So
it was Hindenburg on the SMCI too, right?
Yeah.
Yeah, I think so too.
Yeah.
So you think about that, and we're going to go to our guest in 1 minute. But I mean, they ended up, like, issuing that report that the books might not be perfect, and then SMCI the next day says, "Ooh, maybe we should check into that." So that's given them even more street cred from that SMCI report. So not surprising Roblox getting hit on this.
All right, before we wrap, let's do Pepsi's earnings real quick. Pepsi came out this morning before the open. EPS of $2.31, beat the $2.29 estimate. Sales came in at $23.3 billion, missed the $23.8 billion estimate. It lowered its outlook, talking about some demand here. Either way, Pepsi shares are they're down a little bit, but it's Pepsi, so they're down 50 cents here after closing down 76 cents yesterday. Down 70 cents now.
Don't move much on earnings.
So yeah, Pepsi moving slightly to the low side. The earnings were not great, not terrible. Not sure how much there else is to say.
Quick, because we got to go to guess. Consumer staples move with the TLT. So if you put the Pepsi chart on top of the TLT, it looks virtually identical. And Coke, similar story. Staples move with the TLT. Keep that in mind. Write that down.
Boom, there you have it. All right, we're going to transition to a little bonus coverage here on Pre-Market Prep. We've got Zunaid hanging out backstage. Let's go ahead and pull my man Zunaid on. Z, how we doing this morning?
I'm doing great. What's going on? Yeah, Roblox always concerns with the child safety, and let's hope they figure that part out. But it's amazing how a few tweets now in 2024, it's been like this for some time, can have a large.
What are you smiling about, Dennis?
Goes right back.
Just my buddy Zed's on. He makes me smile. I love this guy. He's awesome.
It's because he's short Roblox, is what it is.
No. I wish I was short Roblox right now. I tell you, but I didn't get no memo from Hindenburg.
There's not a zero.
No Roblox position here.
Yeah. There's a non-0% chance that Dennis actually is Fuzzy Panda. We've never seen.
Am I Fuzzy Panda?
We've never seen Fuzzy Panda and Dennis in the same room before. All right, Zunaid, what do we got coming up here?
So, look, you guys know that we have our trading competition that's going on, and of course, there's been a lot of changes in the leaderboards and different things like that as well. But there's been one person that now, for majority of the time, has been number one, and we wanted to talk to her. So her name is Andrea. She's got some really cool. I had the pleasure of talking to her off the record about what her journey's been like, what her trading strategy's been like, as AB impolitely says bye to me, but it's going to be really cool to kind of talk.
Here, I wanted to give you the stage. I wanted to give you the whole stage.
I'll see you later. I got it. Have a great time. But Andrew, give me a thumbs up whenever you're ready, and I'll go ahead and bring you on. All right, perfect. Andrea, welcome to the show. I was just telling the viewers about how, we've been doing this trading competition, and, it's powered by Trade Zero, and you are on the number one spot. I'm going to go ahead and share my screen here real quick, and you've had some great success. There's your name, right? We all started off with $100,000 in the trading competition, and you've found a way to consistently go ahead and be at $1 million there. First off, what's it been like to be a part of this trading competition?
It's been wild. I mean, I didn't expect to end up in first place. But yeah, I mean, I think that all the time that I'm not like working away at job applications and trying to do my research in grad school, I've been like keeping my eyes peeled. What's going on in the market? How's my account doing for this competition? Yeah.
So tell us about your background, because I know that it's not just that you are trying to trade in terms of retail, but I know you've got bigger aspirations and you're kind of testing a few things out as well. Tell us about that.
Yeah. So I'm working on my PhD in math right now, and a couple of years ago, someone invited me to this like trading discovery program where you can like learn more about like what finance is like, what trading at finance companies is like, what quant research is like at these kinds of companies. I thought it seemed really cool. So I did a couple of internships in quant trading at some like proprietary trading firms. They mostly were like options firms in Chicago area. So I learned some things. And then when I was doing this competition, I was like, okay, can I apply anything that I've learned to try and actually make it work for like retail trading? And I think I got lucky.
That means you've been right on, and we'll talk about your strategy here in a second. It looks like a lot of folks are congratulating you, especially getting a PhD, and looks like you're wanting to go in the quant space here as well.
Yeah, that's right. Yeah.
All right, tell me about your strategy. How are you kind of finding trades in the markets, especially with so much going on in the world, not just overseas, but also here domestically? How are you kind of finding your opportunities? What are some of your strategies here? And I'll share my charts if you want me to, but give us some insight there.
Yeah, sure. So I'd say there's kind of two things. I'd say in terms of like the actual strategy I'm trying to run, it would be something similar to like a volatility arbitrage strategy where I'm looking for a mispricing between implied volatility and realized volatility. And a lot of that comes from just looking at like what a straddle break even is going to be on a given asset and saying, okay, I think this looks cheap. I think it could move this much, or I don't think it's going to move this much. That's part of the strategy. The other part is recognizing, okay, this is a competition. I didn't expect to end up in first place, but I was thinking I want to try and win this competition if I'm going to compete. That means that I should not treat this like just regular trading like I would in my regular account, because I only get money for first, second, or third place as opposed to any place in the competition, which is how it normally would be for trading. So I'm going to take on much riskier positions to try and potentially get first place. And so that's what I did. I kind of went like all in on Pinduoduo calls a couple weeks ago. I didn't know there was a China stimulus happening because I wasn't checking the news at the time. I just saw Pinduoduo's up. I'm just going to buy lots of calls and see if it keeps going up. And it did for a few more days.
That's awesome. Are there any tickers that you're looking at here for the rest of the week? Because so we have, 5 days remaining in this competition. And then we have contest number 2 starting and contest number 3 starting, which, by the way, someone in the chat asked, does it go back to 0? Everyone will reset back to 100,000, and then we'll do it all over again starting October 15th. But you're up over 700,000 compared to the other folks. Let's assume, outside of that, are there any tickers, any things that you're looking at in the markets that our viewers can possibly take advantage of for a trade idea?
Yeah, I think I'm looking at a lot of different tickers. I think, TSM, NVIDIA, SMCI, other like semiconductor related names are definitely all names I'm watching. That I'm interested in anything that has China exposure, between Pinduoduo, Alibaba, these kinds of names. I'm also looking at just like a few others that I think look interesting, like Tesla, I guess, obviously, CVS. I've been noticing ALB has had some interesting movements recently, so I've been keeping my eye on that. Yeah.
Awesome. Last question before I let you go. If you do go ahead and stay in the position you're in, which is number 1, and you secure $5,000, and let's say you win the other 2 contests as well, which would get you $30,000, how would you utilize those funds?
Oh man. Probably get a massage for all of my like aching back after huddling over my phone to put on all my trades.
You trade from your phone. You're mainly phone. Wow. Okay.
Yeah.
I must be doing something wrong because I have like 4 monitors and I have lost money in this competition, but that's all right.
It must be because I'm Gen Z. I've got that youthful do everything.
I have now been called old in front of 1,000 people. I appreciate it. Any final thoughts on the competition before we go?
I don't know. Good luck, everyone. I feel like I have as good of a shot of winning as anyone else does, especially for the other 2.
All right. Well, hey, again, I appreciate your time. And for the folks that are watching, let me say bye to you first, Andrew, and I'll give my little monologue. But thank you so much for your time. Best of luck in the remaining 5 days that we have.
Thank you.
Take care. It's awesome to kind of see. I never thought we would have someone who's, looking to be a quant trader and get her PhD in mathematics and all these other cool things to be interviewing us, or for me to have a chance to interview. But here's the deal. I put the link in the chat. So you have 5 days remaining in the contest. So if you sign up now, and you have to trade 5 days to be eligible. So if you sign up now, you still have a chance. You would start off with 100,000, but you have a chance to go ahead and still overtake Andrea if you place some trades and you get something out of the park. And there's a lot of news coming out for the rest of this week. But you also have a chance to go ahead and compete in contest number 2, where the first place winner is going to get $10,000. And then you have a chance to also be a part of contest number 3, where we're giving away $15,000 to the first place winner. So even if you miss a chance to go ahead and get placement here in contest number 1, there is still $25,000 up for grab in contest number 2 and contest number 3. Contest number 2 starts on October 15th. If you have any questions at all, email me at zunaid@benzinga.com. My email address is in the chat. We appreciate your time here today. The link to sign up is there as well. And now you have Ryan and 13 coming up next. Happy trading. Stay green.